Hello, and thank you for joining us for our latest Finovate webinar. I'm David Penn, Research Analyst with Finovate. Today's presentation is called Enhancing Customer Engagement with AI-Based Hyper-Personalization. Leading our conversation today are Jody Bhagat, he's President of Americas with Personetics, and Dan Westhues, he's EVP and CMO with Central Bank. Gentlemen, thank you very much for joining us today. We've got an incredible conversation coming up. I'm very much looking forward to hearing insights from both of you. I thought, Jody, perhaps we could start with you on the general idea of financial wellness and that nexus with artificial intelligence and personalization in financial services.
Thank you, David. And it's lovely to be here and great to be here with Dan as well. Just by way of background, our mission at Personetics is to empower financial institutions to maximize the value of every interaction through data-driven personalization. And we have a vision, or aspire to a vision, where every customer is able to make smarter financial decisions. To your question, David, we think this is actually a very critical time and a transition point for the entire industry, one where we will see greater separation between leaders and laggards. And that is amplified by a few themes, macro themes, that we're seeing in the industry. First of all, in terms of a rising rate environment, which is putting more money in motion and more customers moving activity across financial institutions. The second is the accelerated shift to digital, which we're all a part of and well aware of, not just creating the impression of keeping up in this digital arms race, but also shifting investment money and requiring more investment money in the digital channel, and that needs to come from some other part of the institution. And the third is that even if, as banks want to have a high pace of change or innovation, some are hampered by legacy technology stacks. We'll actually hear from Dan about how Central Bank is approaching that, but it's a real consideration for many banks. And the last is the advent of open banking, which is putting more control in the hands of customers, that is, control of their data and control over their experience as well. And David, this is particularly true for regional banks in terms of how some of these challenges are exacerbated, because we know that the big national banks are winning more than 50% of the new money in motion as part of this flight to quality, which has certainly exacerbated that condition as well. And the second is there's actually expansion, not just expansion from the institution, but even branch expansion. And it's coming in tier 2 and tier 3 markets, traditionally where regional banks have thrived. And last is, while regional banks have really aspired and espoused the local relationship model, that model is being put under a different kind of test, having different challenges as the shift to digital puts more pressure on that relationship model. So those are a few things to consider in terms of macro challenges and opportunities for regional banks in the industry.
Interesting. And some of the things that you mentioned, not just the size of the banks themselves, but the way that they're expanding into territory that was previously thought, if not safe, certainly possessed by regional banks, community banks, and smaller institutions, and how that just increases the competition that they're going to have to deal with. It's really fascinating to have you with us, Daniel, as well, to talk about some of the practical experiences and things like that you've actually undergone as you've gone through some of these processes. I wonder if perhaps you could speak to that just a bit.
Absolutely. And Jody's last point is spot on. We're headquartered here in the state of Missouri, which a lot of people might refer to as a flyover state. And certainly the big 5 banks have always considered us that. But in the recent years, as they continue to try to expand, we're definitely a target. And so it's new for regional banks. We've always owned these markets out here in the Midwest, and we compete against other regional banks or community banks. There's a lot of banking in the Midwest. And for the large banks to come in now, which is appropriate, it just makes us step up our game that much more. And so I've been in the bank for about 30 years, and I actually grew up in retail banking as well as tech. And about 30 years ago, I got hired to kind of build our first generation internet banking back in 1995, because we thought the internet was going to be something. And so I've just been kind of studying this phenomenon of a customer migration, of how they experience or consume their finances. And I have on the slide here just a couple things that are on my mind today that are different, particularly as we move into mobile. The first one, I mean, these are not, revolutionary by any means, but, customers are increasingly prefer digital channels. That's obvious. I mean, look, I'm a small bank and centered in Jefferson City, Missouri, smack in the center of the country. And I have over 7 million logins into my mobile banking a month. And of those people that are doing it, they're logging in an average of 20 times a month, 20 to 26 times a month. Now that seems amazing, but what it really is what's the story behind that? What used to be banks would be part of your financial lives is now today we're part of your cash flow needs every single day. They're using us as part of their daily activities. And if I have that many interactions with customers, what am I doing with that? What are they doing while they're with us? And how do I use that to help enhance their lives and to strengthen the relationship I have with the customer? So they just are using these channels so much now, which is amazing. But the other thing that I've noticed just recently is that mobile payments and digital wallets are continuing to gain popularity. You know, back when Apple Pay came out years ago, we were one of the first banks. They had their partner banks when they started, and then they had a second wave of banks. And in fact, we were the smallest bank in that second wave to launch Apple Pay. So we were in very early, and albeit it was a slow start to digital wallets, as you well know. But it's starting to gain popularity, and our growth is double digits every year of a number of our debit and credit cards that are being loaded into those digital wallets. In the same token, the banking's response to Venmo and other P2P type solutions was Zelle. We were an early adopter to Zelle as well. And even in 2023, we had a 32% increase in the number of transactions in Zelle. And so what that's telling you is that consumers are choosing multiple and different ways to move money. So why is that important? Well, again, it's all happening within my mobile banking app. I'm part of that transaction, but also I'm getting the transaction data. And that transaction data is rich, albeit still messy. In our industry, we need to be learning to clean our transaction data a little better, but I have it. And so what do I do with it to make that customer's experience better, to make their financial lives better, and to show that we can add value to them? And so there's going to be a lot in that space. Payments to me is extremely interesting when it comes to banking. And then finally, the thing that I've been studying for a long time, which is customers are not afraid to go elsewhere for pieces of their financial portfolio. I call them monolines, monoline services. Here in Missouri, I always had to worry about the bank that I'm looking at right now across the street, or now these big boys. But I have to worry about these monolines like Rocket Mortgage for mortgages, or Robinhood for investing, or Venmo for payments. And I think if you were to ask customers on the street and I asked them who was your primary bank, they would say it's us, because that's where the checking account is. But then if I start to look at their total financial portfolio, all of a sudden I don't have as much as I used to. Well, there are mortgages with Rocket or wherever they chose to do it, because it was easy and it was available to them in this digital space. Well, why were we not at the table at that moment? And so while they define us as their bank of record, we don't have the entire financial portfolio. And so it all speaks to what I kind of have on the next page, which is we have to show that we can provide value, and there is a lot of opportunity there for us. And so what we're really trying to do, and why we chose Personetics to help us in this journey, is we've got to get closer to the customers. We have to strengthen the ability to use the data that we have, so that then they can in turn empower themselves to make informed decisions. And we're going to do that through kind of money management tools. But look, we've had money management tools for a long time. We were also kind of early in that space. We've had a goal setting and a cash flow and an aggregation tool. We've had all of those things out there for a long time. And what's interesting to me about them is that they're still very customer driven. In other words, the customer has to do all the work. So I want to go set out a goal, or I want to set a cash flow. We put all the tools out there, and aren't those tools cool? Well, they are cool, but they're very customer dependent. What we want to do is change, why can't I be part of that? I've got the data. Let's make data-driven decisions versus customer-driven decisions. Let us be part of that conversation for you, and take some of that onerous task of trying to figure out what to do with my finances off of the customer. And that's where we can really show value. And that's what regional banks do. But we've got some challenges there. And it is just as Jody said, regional banks, number one is our legacy stack. Now we happen to own our own technology stack, and we have built and we run our own digital platform here. So we have a little bit of an advantage, but that doesn't mean that I don't have resource constraints. I have a lot of resource constraints, and it's really hard to compete against the big guys and the fintechs in this space. So we have to find strong partners, and strong partners like Personetics that do a few things really, really well and can get us into things like AI, to dip our toe in there from a customer perspective. Let's figure out how we can do some of these things, but it solves our resource constraint, because customers at the end of the day, They still expect us to do all the things because they've seen it, right? They see what digital investing looks like through Robinhood, or they see all these things. They're being told this is the things you can do. You can have early direct deposit, and we can all these things. I got to go build them, and I should be building them because we're the bank. We're the most trusted partner for these customers, and we need to be able to capitalize on that. And so we've always said for Central Bank, we want to say, look, we'll always win in our communities because we can be closer to the banks, we can be closer to the customers than the big boys can. I've got boots on the ground. We'll win in that space, but it's not enough anymore. I have to go toe to toe with them on technology, and those are the challenges that regional banks have today. And they've shifted their mindset of where they're putting their dollars into trying to grow their franchise.
Very interesting. I just wanted to highlight that point that you made. It's interesting, again, the competition. I know that even some of us sometimes in fintech tend to think of competition as big bank versus smaller bank. But the point that you made about that sort of these services that the bank might be offering, that pieces of that can be taken away. It's not necessarily they choose one institution or another, but they choose parts and services and so forth, and how that really does accentuate the challenge of competition.
It does. And, and that's what's so great about fintechs. I mean, because I love fintechs. I love studying because what they do is they approach a problem or they approach something. Maybe it's making of a mortgage loan, and they're not bankers, right? They're like, I'm going to solve this issue and remove all friction. And what they end up creating is an incredible UX, right? Incredible, customer experience and user design, and have removed all of the problems that I have with my legacy systems that are running my program. And so we have to learn how to do those things better. And that's where we're spending our resources today. And when it comes to managing finances for customers, customer behavior has always fascinated me. And so if you sit and ask customers today, this is what they'll say, right? I want to improve my financial habits, but I don't really have time. Make it easy, but make it meaningful. But if you ask somebody, do you want to set goals? Of course I want to set goals. Do you want to understand where your money's going? Of course I do. And even in our old money manager kind of platforms, they did it. They would go in and set a goal, but then they would never go back, and they would never take a look at it because, again, it was so customer driven. I told you we had 7 million logins a month, David. The average time on app is still less than a minute. So when they're coming to our app, they're doing they're very transactional, right? I'm going to make a payment. I'm going to move some money. I want to see what my balance is, whatever it is that they're doing. And we're glad to be part of that. But what I want to try to do is slow those customers down, and let's help you. Let's provide value to the customer so that while they're there, we're actually doing something with them to further their financial lives, because that's what banks are supposed to do. So, and as we set that value, if we can do that, we can slow that customer down, and they realize that we have something to add to conversation. That's where we're going to start to win. And so for Personetics, it's about delivering on that value. We're going to build out 60, they call them insights. We're going to build out 60 insights for our customers, and we're going to weave it through our online banking application or our mobile application versus, hey, click here and choose Money Manager and go set a goal. Instead, it will naturally flow through the mobile app, which we're able to do. But that's where we start to deliver on the value that Personetics is able to give us, and decide what's going on with that customer, take some data and give them the right solution at the right time. And then it's all about reinforcing it. I've got a product out there that is super simple, right? We send you a credit score every month via email. We say something changed, nothing changed, you're good to go. And all we're really doing is reinforcing the value of the relationship that we have with them, and they feel comfortable about it, and they trust they trust us. I should be doing that in every piece of the customer's financial life so that they can really see the value with us. And that's what some of the things that we're looking to Personetics to do is expand the conversation that we're having with these customers.
Absolutely. I just wanted to remind our listeners, speaking of customer behavior, that there's some customer behaviors that we're going to encourage out of you, and that's asking any questions that you might have either for Jody or for Daniel. We're going to have a bit of a Q&A session toward the end of our presentation. So if you've got a question, go ahead and submit that to us, and we'll go ahead and see if we've got some time toward the end to address all of that. We have quite a few questions I'm sure we'll be dealing with. So definitely make sure you get yours in, and we'll try to get to as many of those as we can before the end of the presentation.
Yeah. So what are we going to do with Personetics? And if you flip to the next slide there, it's about truly delivering on personalization. So look, I've been doing next best product and targeted marketing for a long time, right? But that's pretty antiquated at the end of the day. I know how many products David has. I know what he doesn't have with us. Maybe we should try to make that offer, and let's pair it up with a direct mail and they can see it. I mean, we're doing those things today, and we know how to onboard customers, but it needs to go deeper than that. And so where we're actually having a one-on-one, very interesting conversation with a customer. And so what Personetics is giving us that we haven't really had the ability to do is, talk to them about upcoming activity. That cash flow calendar that I've had out there for a long time, it needs improvement. And so because it needs true data to let people understand what's happening in there. And wouldn't it be better versus me doing a target market that says, hey, you should have a credit card? Wouldn't it be better if I turn to Personetics and help me say, okay, look, you just made a payment on a credit card of $8,000. That equates to X amount of rewards points with our credit card, which we would dump into your savings account of this amount, which, by the way, is enhancing the goal that you set for saving money and kind of connecting all of the things that the customer is doing. So it's about thinking differently, and how do you really personalize what's important to David, and how can we set some, what we call them, insights? How can we set those insights that you're getting a different experience when you're logging into mobile banking than I'm getting, and us being part of that. Other things that I think are exciting that we're going to add in that I'm pretty happy about is just letting them know, again, it's kind of that, like I was sending out credit scores so that they just felt comfortable about it. What if I just was part of that conversation and said, hey, you normally pay your credit card, have an auto payment of this, but now it's gone up at, 10% this month. Were you aware of that? Let's talk about that. And does it change any of these goal settings, that you have over there? And so not so much, again, it's all data driven, so that we're helping them answer the questions that they didn't ask. I think this is really what I want to help them with. And let me give you another example. We built Roundup years ago, right? It was an old product where banks, every time you swipe your debit card, I think you know what it is, and then we round up to the next dollar, and then we dump that in your savings account. It's kind of a savings plan. We didn't really do it for a long time. We finally built it out a few years ago, and it exploded because it was easy. And a customer said, well, yeah, that's my savings plan. And we have over 50 some odd thousand customers doing it. And I looked at last year, we had over $15 million in savings and customer savings accounts from Roundup. Okay, well, that's a great product. Well, why was it so popular? Because it was very easy to do. They didn't have to do anything in the going forward, and they're just doing it. But now what I want to do is remind them of it. I want to have a conversation with them and use Personetics to say, hey, by the way, this is how much you're saving, and continually putting in your savings account. By the way, if you were to maybe just do $1 per, you can afford, based on your cash flow, you can afford $1 per swipe versus rounding up to the next dollar per swipe. And that puts you X% over your goal for savings for this year. All of a sudden, I'm adding a lot of value to that customer because I'm actually helping enhance their financial lives. And so those are the kind of things that we're trying to get done. And that's, again, it's all about timeliness, which is what I have in there. Hey, you had a spend with a new merchant, or I'm getting real-time data now. All that payment data, it's all real-time. I used to, this is awful, but I'm an old banker, but I used to get printouts of checks that went out of this bank for $10,000 and above. I used to get them monthly, then I get them weekly, and then I started getting them daily, and that was pretty exciting, or you start looking at ACH data, but this is all real time. And now I can have, with the help of companies like Personetic, we can come back to the customer and say, hey, I see you're doing this, let's make it better. Or maybe, is there something we can do for you? And then other types of information is just making it different. I've done the wheel, right? I've got the wheel out there that says, okay, here's how you're spending your money. This is how much is going to rent. This is how much you spent out in dining out, and this is what you spend in groceries. It's really cool the first time you see it. The rest of the time, it's depressing. So what I want to do for customers is say, well, let's take a quiz. Let's talk about what you did last month, and let's have some questions about it. And can we help you improve it for the next month? Or hey, based on your spending habits, it's very possible you're going to overdraw your account. And I want to help you make sure you don't do that. Even from a regulatory standpoint, I need to prove that I'm helping customers not do that. And I could do that with data, and we should be doing those things. And so that's kind of the journey that we're on. But the whole point of it, and I'll wrap it up here because I get to talking pretty a lot, David, I apologize, but is I want to align the strategy of the company to technology. I told you, we know how to be in front of the customers and work with them one-on-one, hand-to-hand combat, but technology needs to help us with that, right? We're still building branches. right? But if mobile banking is going to be my branch of the future, we got to go past the teller line, because right now it's a teller line, right? I get my balance, I make my payments, I transfer money, et cetera. In the branch, when they walk in the door, the real goal is to get them in front of a personal banker and let them sit and let us talk and let us consult them. What I need to be able to do is do that in the mobile space. And that's where AI, that's where the insights from Personetics and everything else that we're trying to build in that mobile app, that's how you become the branch of the future, is you get past that teller line.
Absolutely, very, very interesting. So many of the things that you spoke about, I really think resonate with folks. I think about people talking, for example, about the genius of the 401k and how that's been such a revolution for people's finances, in large part because people don't have to do much. That it's not incumbent upon them to do all of that work. It does it automatically and goes forward. I think about the issues of engagement. A lot of folks wear fitness trackers, an Apple Watch or a Fitbit or whatever, and every now and then you get that little vibration on your wrist that lets you know that you've crossed the 10K steps or something like that. And it's a little thing, but you know that moment in your day, and it means something.
Absolutely.
I've done my work, and it's really interesting to see some of the different ways. They might seem like small ways, but they just sort of let the consumer know the bank is here, the bank cares about you, the bank is interested in you, and the bank is maybe able to help you out, get through some of these different little life instances.
You know, a lot of, I was thinking about your Apple Watches. You just said it, you know, they tell me to stand up and move, but I have so many people here that are also sharing their workouts with other people, and they've kind of put some gamification into it. And we actually did kind of a sprint here to kind of say, what would that look like in a banking, you know, in a goal setting? Like everybody has their setting, maybe it's a common goal that everybody's adding to. And could you join in our mobile app and save money for a vacation between 4 or 5 people? Or could you, you know, have savings goals and who's making them, and gamify it in some sort of group environment? It becomes very complicated, but those are the kind of things that I think will eventually evolve to.
Absolutely, absolutely. Jody, I'm curious some of your thoughts. Again, you know, we've had Personetics named quite a bit for some of the things that you've been able to work with Central Bank on. What are some of your general thoughts about this particular path? And again, this combination of using AI, machine learning, some behavioral insights as a way of really trying to get banks in a position where they're better able to engage those customers and maybe not have them slip through the cracks and take services elsewhere.
Yeah, thanks, David. I just wanted to comment. I think, you know, our audience just received a masterclass from Dan around what a desired vision and experience for customers look like, grounded in the realities and the challenges of the competitive landscape, and also infused and hopefully amplified by some of the analytics and technology that's out there that can really help propel regional banks to better deliver on the needs of customers and help them better manage their day-to-day banking. So it was really, I just really appreciate the wisdom and insights, and I will try and add to it, but he did set a high bar. So let's talk about some of the implications for personalization strategies. One is around the battle for deposits, which we know is very relevant and prevalent for the entire industry. Second is that these large transformation efforts, that there's cost pressures that are happening, which is inviting banks, or actually challenging banks, to be more prescriptive in terms of how can I deliver near-term value while still undergoing a broader transformation effort. The third thing, which Dan also alluded to, because he talked about humanizing the digital experience, you know, the pessimistic way to kind of look at this is that there is a digital profitability gap, because when customers came into branches and were engaged by the banker, they were able to uncover implicit needs as well as explicit needs and help the customer use the product. That now needs to be reinvented in the digital channels so that we don't have this digital profitability gap of lower usage, lower relationship depth, particularly in those first 90 days, which leads to lifetime profitability as well. We also see that virtual assistants are starting to raise their IQ. We're all familiar with the work that B of A has done with Erica. Wells Fargo is now coming out, or has come out, with Fargo, and they're infusing that with more intelligence so that Fargo can be more proactive and responsive around customers' broader financial needs, not just helping them with their servicing. And then this idea around customer journeys taking the center stage. Dan gave some terrific examples, like around roundups. And these customer journeys are where customers have jobs to be done that requires 1 to 2 years of effort in terms of, I want to save for a goal or better manage my spending. and knowing the customer and what they're trying to accomplish, and then delivering the right kind of solution, that is tools, content, products, uh, and and relevant information or insights, and also tracking behavior is all part of helping customers with their customer journeys. And we also believe that the traditional approaches around how to compete in this environment, deposit acquisition and growth, it's suboptimal. So you probably have a weighted average market pricing and that approach, and that in the past you could be fairly deterministic in terms of what kind of deposits that may bring in, but customers are looking for more than just rate. And promotional marketing, while useful in getting a bump, doesn't really result in the sustained relationships that banks want to see. Third is, Dan talked about some of the traditional static PFM. It doesn't really drive enough value. It's also burdensome for the customer and certainly doesn't see the resultant impact for the bank. And lastly, even how we empower our bankers, whether it's with marketing lead lists or, as Dan talked about, some version of next best action, which is kind of look-alike, it's not powerful enough to help bankers really engage in a very informed way. So our view on it is this, which is we know that data is the most valuable asset, but when you convert that data into actionable advice, that's what creates advantage. And it invites us to consider a different way to compete, which is what we believe is called personalized engagement. And we know that customers that are more engaged in the digital channel, more engaged with personalized insights and interactions, and the banks that are helping them with that, they have higher deposit balances, higher average number of accounts, higher monthly income, particularly when you can see higher rates of engagement. And this comes down to this concept around personalized engagement, which has 4 elements to it. So the first is around data enrichment and cleansing, which is a foundational element to help you understand what is the transaction data, what does it mean, and what's it telling you about the customer's behaviors and their needs. The second is personalized insights, and Dan talked extensively about how Central Bank is really leaning in there. Third is around the journey delivery, helping customers with saving for a goal or better investing, starting to invest or manage their spending or improving their credit score. And then the last is connected channels, which is taking this intelligence, propagating it, not just in digital channels, but also to bankers and to your MarTech stack as well. And we believe these are the foundations or the pillars around being able to compete around personalized engagement. So it does start with the transaction cleansing and enrichment. There's some really good technology that's available out here that for the industry, where in North America we can be very robust in terms of cleansing transactions, accurate categorization, matching it with the counterparty key, the merchant information, identifying if it's a subscription merchant, the logo, the location, making customers more aware of the transaction and reducing the calls into the call center as well. But this also creates a foundational element for the next stage, which is the personalized insights. So as Dan expressed, this is the gamut of insights that are helping customers better manage their day-to-day banking, looking out for their transactions, identifying when there may be an anomaly, when they may have a cash flow issue, or when they may have cash surplus that they may be able to open up an account, a savings account, or maybe it's an investment account, helping them manage their subscriptions. And most importantly, at least from the bank side, based on their transaction activity, uncovering needs, which defines or indicates that the bank may have a better solution for that customer, either moving into a better product or adopting certain tools like remote deposit capture, or taking out a premium card because their transaction activity suggests that they'll get more benefits as well. And this is this value exchange, what Dan talked about in terms of trust exchange. This is this value exchange in terms of showing that the bank is really looking out for customers. We talked about some examples there. Cash flow is a good one. Onboarding, where you can go deep, and it doesn't have to be a static onboarding. It can be really tailored to how customers are interacting today so that you're really achieving those improved 90-day outcomes. Subscription management, because every household is really dealing with what seems to be increasing subscriptions and harder to unsubscribe from things. And then also identifying particularly how you maximize deposits in this environment where you know customers are also doing more shopping as well. So the next one is around journey delivery, and I'll share with you one example. This is a large bank in Canada, BMO, and about 15 months ago, they launched their savings amplifier. They've talked about now it's actually well over 100,000 savings goals that have been created. They talked about opening up 20,000 new savings accounts just in the first quarter alone. It's their highest NPS rating, and it's because they're helping customers in an easy fashion set up goals and then acting on their behalf to distribute money and then showing trackers in terms of how they're performing. And as Dan talked about, reinforcing the behavior is a very powerful construct that really helps to reinforce the trust there as well. The last piece here is around connected channels, and that's taking all of this intelligence that's actually resident in your transaction activity, particularly if you have the primary relationship. It doesn't even rely on open banking, but then being able to draw on that for deposit intelligence. When can this customer save, and how much can they save beyond their cash flows, beyond their expenses that are required? Lending intelligence, if we see a cash flow issue or if they've got increasing external debt elsewhere, but not within the bank. And then also financial relationships, because we know that when they start or end financial relationships, that's an important event that banks can capitalize on as well. So these are just some of the use cases. Customers with excess cash, more than enough to cover their 30-day expenses. Let's use that event, that interaction to be able to expand our deposit relationships with them. But the key to all of these is showing customers the evidence of the benefit. Why are we reaching out to them? What's in it for them? Customers that are likely to move cash external to the institution. Let's try and retain that deposit leakage by saying, look, that extra $10,000, we have a better solution than the investment house across the country because we have a discount brokerage, or we think you should speak to a financial advisor. In the case where customers may have a cash flow issue, as opposed to waiting for the penalty fee to occur, then the customer calls in, has a burdensome and operationally costly call with the call center, and half the time you're reversing the fee. Let's instead have that discussion around, let's sign up for overdraft protection or an unsecured line or move money in from outside the institution. And then, as I mentioned before, capitalizing on those events where customers may have either starting a relationship or maybe they're ending their auto finance payment, which we know is usually a case where customers may be in the market then for their next auto as well. So these are all just bringing this all together within the construct of personalized engagement, where the intelligence can be delivered in digital to bankers and into the MarTech stack, all for the purposes of demonstrating that my bank is looking out for me and helping me better manage my day-to-day banking. So David, back to you.
Very, very interesting. I really appreciated that evidence of benefit, which is something that sounds obvious on the one hand, but you think that's something that the customer really needs to see. Otherwise, what keeps them engaged? What keeps them going on? What keeps them looking for more? So I really appreciate the way that you phrased that. We've got about a little over 10 minutes left, and we've got quite a few questions that have come in. If you do have a question for us, we will try to get to it. If we don't get to your question, we will have an opportunity for you to email or send your question to our guests, and they'll be able to answer it offline. But let's go ahead and jump into the questions that we have received, and a few of them actually might serve fairly well to summarize and to give us some top takeaways. The first one, and this is for both of you, is sort of a general question. Why is it important for regional banks to act now with regard to data-driven personalization? I guess the urgency is maybe the key part of that question. And Jody or Daniel, whoever would like to take that one.
Please, Dan.
Well, yeah, because everybody else is moving that fast as well, right? I was just thinking about what Jody had said just a minute ago about deposit leakage, and so and regional banks are probably and he started this entire conversation at the very beginning about the number of the flight of money to safety and the flight of money to the large banks. That's a very concerning piece for us, because again, we've got the trusted relationship, but when it is extremely easy to move money out of your bank and without having to come in and write a check, that's concerning for us, because the core deposits is the core of the bank. I mean, that's what it is. And so I think regional banks have got to figure out how to make sure we're in the game completely, and then figure out how to win it. And Obviously, I'm very conscious, just like every bank is, about our cost of funds, but I'm more conscious about attrition of my customer base. And so it's probably, to Jody's point, he's probably exactly right. It's probably better for us to invest in this quickly because we know customers will move money. Loyalty is important, but it's not as strong as it was in the past. And so people will chase rate sometimes. And I'm okay if people chasing rate. And maybe I won't be the highest, but maybe there is part of they do understand the relationship. But I want to be able to say, okay, you know what? Why don't I come to you ahead of the schedule and say, you've got excess cash here, let's do something with it, and let data drive that decision and help us be in that conversation before it flights out. Because once you start a relationship with another institution, now I've got somebody else talking to you. Now we're double dating, and that's never good because now all of a sudden I'm in competition.
Absolutely, absolutely. Here's a question that I think a lot of people might have had as well as we were hearing about some of the different use cases that you were both sharing in terms of some of the things that we can do now when you bring AI to data, when you add machine learning technologies and things like that. In terms of customer experience and customer engagement going forward, what are some of the ways that you see some of these technologies evolving with that experience? What is it that we're going to be able to deliver customers in the near future using AI and machine learning technology?
It's such an exciting space, and Dan talked about the progressive institution like Central Bank, how they're really leaning in, and frankly, it's a big leap forward, right, versus some of the traditional tools and capabilities that that the industry used to deploy. Customers will really see it as, yeah, my bank is actually they know me better as a customer, and they're helping me anticipate issues. So I don't want to minimize this massive leap that's occurring, but also want to put it in context, which is we're just at the incipients of what data-driven personalization can and should do for the entire industry and the relationship between banks and their customers. So, right now we're talking about really creating a much more informed interaction through digital. But there's so much more opportunity beyond this as well. And just to give you kind of a little, let's say, peek around the corner, because we do believe that a basic version of these insights will become rather ubiquitous. It'll be table stakes, right? Now, more progressive banks will really lean in and use it to enhance their brand promise. But it'll go beyond the digital channel. I talked about some of the journeys where when a customer is trying to save for a down payment for a home in 2 years, they need more than just a mortgage loan. They need to save for their down payment. They need to improve their credit score. They need to address their spending in such a way. And they need also help in terms of content around, okay, how should I prepare for my first home or my upgrade? And you can see how that's different than just a product construct. It's actually a solution, an experience, and it's a multi-year journey. So that's something which I'm pretty excited about in terms of it's not super simple to execute on, but I think it's very compelling. And the last thing I'll just say is that as this customer intelligence becomes more available and available to the banker and available into your marketing technology stack as well, you'll also see a different kind of interaction and value exchange from the banker. You'll see increased banker productivity. And you'll also see marketing campaigns, not just the ones done digitally, but the ones done elsewhere, that are distinguishing when, for instance, this customer that we know they're moving 90% of their excess funds outside to another investment house versus this other customer, which when they have excess liquidity, they're actually very happy keeping it within the bank. We just need to give them more relationships. The way that I interact with them and the advice and the offer that I give to them is much more tailored based on their transaction activity and their behaviors. Dan, I'd love your thoughts here as well.
Yeah, well, everything you said, I 100% agree with. I'll give you just one other kind of avenue or a different runway, because when you take a look at what's going on with AI and what we can do in our industry, it's really fun to sit down and think about customer friction and how can we remove it. And so besides everything that he just said, it was just extremely valuable to grow those relationships. How do we service them better? And so things that are simple, we sit around the table and talk about is like, well, wait a minute, we have all these customers calling in to raise their debit card limit. Why can't AI step in for us and say, this is clearly, David, obviously this is a legitimate purchase. Let's just move forward, and take those out of our call center and take them out of the mobile banking app and just make some of those things happen. Can we identify fraud faster using AI? Because we're seeing certain things hit our, Reg E disputes or whatever. And we've seen all of a sudden there's a pattern, there's a trend. Somebody needs to get on top of this right now. I mean, the way AI will change banking. I saw an article is like us, insurance, and a couple other industries are the most impacted by AI. We can improve both our customer experience, remove friction, and obviously increase the operation, the efficiency.
Absolutely. And you mentioned operational efficiency, and that actually touches on one of the questions that came through. And this one is specifically one for you, Dan, and it's talking about your role as a CMO. And the question was curious about how that role is changing and how you lead these kind of complex digital transformations within your in-house IT department. I'm sure people are curious about, we've heard this from the customer side. What about those of you guys on the other side of the counter?
Yeah, sure. I do miss the old days of sitting with the ad agency, coming up with a really funny campaign and letting it go and see what happens. Like those were the best days. But it's really not that way anymore. A CMO's journey started there, obviously, and then we got to be able to do digital, digital advertising and social media, and we could evaluate ourselves by clicks and engagements and et cetera and website visits. But now it's much more, right? Because once the ROI is probably one of the most important things that marketing has to do now, return on their marketing dollars. If we're going to spend this money, what are we going to get out of it? And so they're naturally turning to technology to help us with that, because technology, like I said, this 7 million logins to my mobile banking. I mean, as a CMO, I'm running technology, customer facing, but as a CMO, I want to talk to those people because if they're getting on there 20 times a month, I can't get in front of a customer in more than that in any other methodology. And so I've got to have a strong partnership with my technology team to say, okay, I get it. We're making things happen. They need to do their transactions. How do I insert ourselves into that conversation and find ways to improve their lives? And so AI and places like Personetics definitely does that for us. But you will definitely see CMOs at the technology table more and more and more now, because it's a delivery channel for us, and it's becoming very quickly the most important delivery channel for us.
That makes quite a bit of sense. Running out of time, but I just wanted to stick with you just for another moment, Dan, and talk a little bit more about Central Bank and its plans to drive customer engagement in the future. Are there things that are sort of in the hopper, things we maybe can stand by to keep hearing from Central Bank?
Well, let's see. That's a good question. Outside of all the amazing things Jody's doing for us, we're trying to decide where AI fits, and of course, we kind of like to push the envelope, but we're also a very conservative bank. And so we're not out there building huge models and, anything like that. But I will say, I'll give you two examples of things that I think are kind of interesting. One of them is we're overlaying some AI into our call center, and it's more of a listening tool than anything. And so imagine my managers of all the call center. We have 80, 100 plus people in the call center, whatever it looks like. And I can overlay a new system on there that says, hey, there's some elevated conversation here. The customer's tone is a little bit angry, or the employee is struggling, and it can pick up on that, and it can alert my managers of that call center to kind of interject or go over there and see what's happening and kind of solve the friction at the moment that it's happening, versus us trying to coach our CSRs, our call center reps after the fact. Let's get in there now and solve the problem now. And so we're really excited to kind of see what that does. Call center is a big piece, right? No one calls the call center to say how much they love us. They're calling us because they've got a problem. And so any tools that I have to help us with that, I'm pretty excited about. Or more importantly, it picks up on words. It's all of a sudden, right now, I mentioned fraud earlier, David, and I wait for the call center to call me and say, hey, we've had 10 calls or 20 calls on this. There's a transaction coming through that is clearly fake, and we've had 10 calls on it, or your online banking is down, or whatever it is. They usually happens a lot of times are the first point of notification for us. If I can even speed that up and have AI go, wait a minute, we've seen this happen throughout the call center weave. These words have come in, there's an anomaly there. Let's go address the situation faster. And if I can shut fraud down faster, you're only helping the customer. So that's something that we're kind of working on, that we're kind of excited about, that's kind of outside of our mobile space, but also incorporating AI into our organization.
Fantastic, fantastic example. Again, we're just about out of time, but I wondered if perhaps we could maybe leave our listeners and our audience with a bit of a takeaways from each of you. There was quite a bit of information, and I do want to let folks know that there'll be a recording of the presentation available afterwards. So if there's anything you missed, you'll be able to revisit it. But I was wondering if Jody and Dan, if there's any takeaways that you wanted to leave folks with, as well as information if people wanted to reach out, further questions, further engagement to you more directly, how they could best do that. So maybe we could take care of those two things by way of close.
Sure, I'll offer some thoughts, and I think again, there's so much wisdom that Dan shared around how central bank is really leaning in. I would just expound that by saying that you don't need to be satisfied with your the historical tech and its performance, right? There are ways for regional banks to really take leaps forward and better compete and actually be amongst the leading players in terms of leveraging data and analytics, not just for the sake of technology, but for the benefits of your customers and the experience, and actually changing the way that you're interacting and delivering much more intelligent interactions. And while there's while it's associated with your customer interactions, so it needs to be unique to the bank, there's ways of getting to scale quickly, as well as retaining the ability to create those unique elements which your bank specifically can promote. And that's why we're very proud to serve Central Bank, because they're really innovating in this space, and they know how important not just their tech is, but also their brand experience and the kind of interactions they're creating with customers.
I think for me, David, the takeaway is for the banks that are on the line, or that are listening. Look, we're still the trusted partner for consumers. We get bad raps every once in a while in the banking industry, but at the end of the day, there's still a high level of trust of banks. For all the right reasons. We're integrated in the communities. We're here with you. We've got boots on the ground. All those kind of things. But what I'm most nervous about is the entire financial picture being pieced away. And so taken away by what I call monoline services. That's just a big thing for me because the whole point of us having all these locations, and sitting here in all these communities is to be close to customers and help them with their financial journey holistically, whether they're borrowing money or saving money or just spending money. And we want to be part of all of that. And we're one of the only institutions left that can still do all of it. And there's a lot of value to that. And so partnerships with Jody and other people that we're looking at only help us with that, to make sure that we're interwoven through their financial journey. And if we provide the value, this is what helps us provide the value to the consumer. They benefit from having a better handle on their overall picture. We benefit, of course, by deposits and loans and et cetera. And so there is a relationship between us and the customer that I believe is stronger than a relationship anywhere else.
Absolutely, absolutely. And just last but not least, if folks would like to reach out to you, what's the best way for them to do so?
Yeah, I think for the questions that we didn't get to, please do reach out to us on personetics.com. Our team will be happy to respond. And then Dan, of course, is available since he's the face of Central Bank.
Yeah, centralbank.net and my Daniel Westhues or LinkedIn. You can get to me through there. Really, we're brand new, right? We've been up and running with Personetics not even a month yet, just a couple of weeks, and so we're really excited to kind of see what happens and then how it evolves. Because it's one thing to say, I think this is what's going to happen. We all know it's going to weave, and that's the great thing about this type of technology and using AI, is that it is flexible. So our journey today may look completely different than if somebody calls me 3 months from now, but it's all going to be good.
I believe that. Excellent, very much. Thank you for your presentation today. Thank you for some very interesting insights into something that I know where a lot of us are going to be talking about, not just in 2024, but beyond as well. So thank you very much for joining us, and thank you, our audience and attendees, for joining us as well. Have a fantastic day.